In the last 2 years, China's economy has been going through some of the worst years in its entire history since World War II. I mean, if you kind of pull out the news, you will find out that this company has filed for bankruptcy. That company is running out of money. The other company, without subsidies, it is going to collapse. So that led me to ask myself a very simple question. Like, what exactly is happening with the Chinese economy? Why exactly it is collapsing? Shouldn't China overtake the United States? That is the news that we have seen over the last 10 or 20 years, that everybody was shouting that in the next 5 years, in the next 7 years, or sometimes in the next 3 years, China will become the first largest economy in the world and overtake the United States. These are the rhetorics that have been in the news all the time. And now suddenly, out of nowhere, that has changed and people no longer talk about that. The next news or the next headlines that we have right now is that China is about to collapse. Isn't that confusing that like 5 years ago we got the news that China will overtake the United States, and right now we have the news that China will never overtake the United States? In fact, China is going to collapse and other economies in the next decade or so, such as India, will overtake China. So let's try to figure out what exactly is happening with the Chinese economy and is it about to collapse or not. So if you take a look at some of the largest companies in China, such as ZEG, that used to worth around $140 billion, you'll find out that this company has filed for bankruptcy and it's one of the largest banks in China. Even if you take this bank and if you compare it to a bank in the United States, for example, it is a pretty substantial bank. It's not a bank that's worth 10 or $20 billion. It has assets. The valuation of that bank was $140 billion, and suddenly such a giant overnight declares bankruptcy. Like, what exactly is happening? Now, another Chinese company, which is called Evergrande, you probably heard about it. This was like a year ago or almost 2 years ago or something like that. It filed for bankruptcy and it's the second largest developer in the country. In order for the second largest developer in the country to file for bankruptcy, there must be some really good, strong reasons. It's just not just out of nowhere. Real estate is one of the major markets in any economy. Even the United States, it's worth like $50 trillion or probably more than that. And if the housing market goes down, the entire economy goes down. We perfectly know that from the 2008 financial crisis. So ask yourself a simple question. Why exactly the second largest real estate developer in China has filed for bankruptcy? In fact, it was actually relying on government subsidies, but even the government subsidies did not help the company to survive. Isn't that weird? Now, another major example I can give you is Country Garden. This is another major real estate company in the country, and it also declared bankruptcy. And that actually leads us to ask ourselves a very simple question. Like, what exactly is happening at this point? Why these companies, one after another, are filing for bankruptcy? Do they have nothing else to do? Is the economy doing that bad that they have to actually file for bankruptcy? Now, in order to answer that question, we have to go back to slightly understand how the Chinese economy actually works. And if we understand how the Chinese economy works, we will be able to answer those questions, because at the end of the day, it does not make sense to take a single event and around it try to understand why it happened. It makes no sense. In order to understand why some of the largest companies are filing for bankruptcies or why the economy is going through some hardships, you need some context. You need to take a look at the wider picture. Like, you have to zoom out a little bit and take a look at what are the reasons that led to this crisis in the first place. Because if you just take a look at the company and pull out its financial statements and take some of the events that the government did so and so, I mean, it will give us some understanding of what's happening, but let's be honest, that it's very little. It's not really enough to understand. Anytime you want to find out the root of the problem, take a look at the context. Take a look at how the thing works in the first place. So if you take a look at the Chinese economy, you will realize that there was this period where the economy has grown substantially. This period was probably where people thought that it is the time that China will overtake the world. And the economy was growing at around, at the peak, it was like 15% growth in a single year. Now, 15% is not what a lot of people don't understand what 15% actually means, because if you understand what it really means, you will be shocked. How fast do you think the US economy grows? I mean, right now, just Google the numbers. It grows at around 2 to 3%. If it grows more than 3%, it is like, I mean, it's amazing. It's like we got some, I mean, it's a fantastic year. So usually the US economy or any advanced economy grows at around 2%. And China right now here is growing at 15% and more than 15%. And that growth wasn't like for a single year, it was like for a couple of years. Yes, growth at this point has stabilized, but even though it was around 10%, take a look at this. The growth is around 10%, and 10% is substantial for economy, especially when we talk such a large economy like China. And that 10% growth continued until this period, until the 2008 financial crisis. One of the major markets that China sells to is the US market. So when the United States went to a real financial crisis that took down with it literally everything, China started suffering because all of its factories used to work hard in order to produce products that will be shipped to the United States and will be purchased by US consumers. And now US consumers are sitting out there and trying to figure out how to save themselves in some way, or their houses, or have a roof over their head. They're not really much concerned to buy some electronic that they don't need at all. And that's why you can see that the growth in Chinese economy has kind of slowed down. But since then, you can see a clear trend right over here. Let me just choose a different color so that I can distinguish what exactly is happening over here. You can see a clear trend up until the pandemic. The growth has fallen down to around probably like 6.6% at this point. I mean, you can actually Google out the exact numbers, but it's a little over 5%. Maybe 6, maybe 6.5, maybe almost 7, but that has been since 2008 financial crisis. And then the pandemic hit, of course, and then we had this negative 7 or 6% or something like that at this point. And then we had a recovery that was followed by the pandemic. So when you see this spike over here, don't be surprised. I know that it's almost 20%. It's probably like 18%. This was simply a recovery of what has happened over here. So don't be surprised. What we see after that is that the economy can't really stabilize. It's 2022 and 2023, and the economy barely grows by 5%. And if you kind of listen to some experts out there who understand China and how these reports are actually made, they will tell you that a lot of these reports, to a certain degree, could be manipulated. So even if these numbers are slightly hyped, a 5%, and it's slightly hyped, let's say it's 4.5%. So we went from a growth rate of something like 15%, 10%, 12%, to as little as 4 to 4.5%. That is closer to the United States, where the growth is 2.5 to 3% or something like that. And if these numbers are over manipulated, I don't think what to trust at this point. But nonetheless, let's take a look at what are the expectations and the focus about the Chinese economy. Well, now I have the numbers in details. You can see that in 2013 and 14, all those years, we had a growth rate of around 7%. But now, after COVID, the growth is expected to go to as little as 3%. I mean, think about that for a moment. A growth rate of 3%, that is a growth rate of the United States. And you can see that the trend is very clear and it's going down every single year. Yes, in 2024, it's going to be around 5%, but that's probably the last year that it will have 5%. Now, some of you might say, so what? The US is growing at around 2 to 3%. Why is it a problem for China to grow at that rate as well, right? Why do we trash talk China for growing that slow? And in order to answer that question, you have to understand how economies work. I mean, there is a very different dynamic about it. Really depends at what phase or the stage the economy is. And you can't simply take an economy that is in its initial stage and an economy that is truly advanced and you compare them equally. It makes zero sense. And that's why we have to kind of slightly go back and understand the phases that the Chinese economy has gone through. See, when you're actually building out your country, if you go back to 1950s, China just emerged after a civil war. Of course, it had also a war with Japan, but that's an entirely different story. After the war with Japan, and it has been part, and it was part of the World War II, China fought a civil war, and that civil war was brutal. I think it was one of the largest death tolls probably in the history of humanity. But that's not the debate of this video, and that's not something I want to talk about. What I want to talk about is that after that war, after that civil war, China emerged as a destroyed country. And the economy was so bad that if you just Google out, you'll find out that there was a famine during 1950s and 60s. And according to some estimates, around 50 to 70 million people lost their lives to the famine. Now ask yourself a very simple question. Probably if you take the entire losses of Germany, the UK, the United States, and the entire Western Europe, during World War II, they lost less people than China did in the 50s and 60s during the Great Famine. And that was how bad the economy was. So you can expect the Chinese economy back in 1950s and 60s as this little country that has absolutely nothing, and it mainly consists of a lot of farmers that barely feed themselves up, and they couldn't even feed themselves up. So when you are building the basic roads in that village, when you're building basic cities, when you're building just homes for you to have a roof over your head, when you're building the basic factories, how fast do you think your economy grows? Of course, during this period, you will suddenly see your economy grow significantly faster. Because if you're building some roads, for example, and your economy is growing substantially fast. You're building some homes, your economy is growing fast. You're building some basic infrastructure, your economy is growing substantially. And that was the growth that China had during the 1970s and 80s. And that's why if you take a look at the numbers from those years, you'll find out that the GDP growth was around 20% or 25% or probably like 18%. And those numbers were absolutely normal for China. It's not because China suddenly is growing substantially faster. It's just because it is starting from scratch. And now take that and compare it to the United States. United States already has some basic infrastructure. Well, of course, the US infrastructure right now could be debatable and it could be questions how good it is. But nonetheless, if you go back to those years, the US had basic infrastructure. The US had basic homes. The United States already had some economy. It has already advanced economies. It has already a very vibrant tech sector. So for the US economy to grow by a single percentage in every single year, it must grow up in the growth that it already had. Compare that to a country like Germany that is very, very advanced. For Germany to grow faster, it's very difficult for them because they already have infrastructure, roads, bridges, hospitals, schools, and everything else. But for China to build, I don't know, like 100 schools a year, that will already add up to the GDP. But if something like that will be done by Germany, in fact, Germany cannot add another 100 schools because who will go to those extra 100 schools? I don't really know how many schools they add up in a single year. I'm just trying to give you a comparison for you to really understand the difference over here. Once you build up your basic infrastructure, you have something called high tech. You are going to go and you start building technologies. And at this point, you can say that China is building smartphones. China is building computers. China is building cars. This is probably one of the toughest periods for any economy because you're not right now just trying to build roads and bridges and probably trains, but you have to build very advanced technology in order for your economy to grow faster. Of course, you can't really expect a growth rate of 20% at this point, but China still maintained to have a growth rate of 7%. That's why if you go back to the chart that we had over here, if you go back to 2013 to 2014 and until 2019, the growth was around 7%. And this was the period where China was building cars, where China was building very high tech, where China was growing substantially over the years. So China has done a pretty good job, I would say, in growing its economy and even building advanced technology. But China is a very different country compared to other countries. Like if you take a country like Thailand or Malaysia or Indonesia, I mean, Indonesia is a very populated country, but China has, it's a different country in its own version because it's one of the largest countries in the world geographically by landmass, and at the same time it was the largest country by population. So when you have like 1.5 billion people that you can employ, I mean, you have to employ them, otherwise your economy won't work. Otherwise, these people have nothing to do, and that would lead to catastrophic consequences. You can actually do things that other countries can't. Like the United States right now has a population, if I'm not mistaken, I could be wrong, so please don't be offended. I mean, because I have to pull out the numbers, but it's something between 300 to 320 million. It's something within that range. So it's around 320 million people. And the US population is actually declining. And the only reason that it hasn't declined to like 250 million people, for example, is simply because that there has been a lot of immigration in the last 50 years. I mean, the United States has a very long history of immigration. It was basically how the United States was built in the first place. But nonetheless, the third stage that the economy grows into once it has built, let's say, its basic infrastructure, it has built some very high paying sectors and industries, it is going to go into something called consumer-driven economy. And this is the most difficult phase that any economy actually faces, because a lot of economies suffer during this period. It's extremely difficult to actually surpass because, I mean, think about that for a moment. You've been growing your economy simply because you could produce cheap things in your country. And the reason you can produce things at a much cheaper price than a country like the United States, the United Kingdom, Germany, France, or Singapore, simply because the people in your country are so poor that you can pay them a penny and they will work. So you have essentially free labor, not exactly free, but very, very cheap. And that was your competitive advantage. And now those poor people don't really have much money to spend, and they will save every penny they make because they have been grown up in a poverty. And a person that has been grown up in a poverty, he knows the value of money and he's very careful with his spending. He's not going to go and buy the latest iPhone every single year. He's not going to get out there and buy the latest car. He's not going to update his car every 2 to 3 years. He's not going to travel across the globe. That's not what a poor person does. A poor person is going to keep his money in the bank because he knows that he might not be able to have that money tomorrow. And that's the difference. So what you want to do is that you need to grow your economy to such a point where the average citizen in your country is making enough money that he can actually spend like he wants. He can spend all the money that he's making without actually being worried about tomorrow. Just like the United States, you can see the people in the US, even if they don't have money, they will just pull out their credit cards and they will still buy that thing. I'm just giving you an example. So what drives the economy forward at the end of the day is spending. If there is no spending, the economy does not grow. Like spending is probably the main factor that grows the GDP, that grows the economy. Think about that. If you stop spending, if you stop buying things from Amazon, Amazon will stop receiving money. If Amazon stop receiving money, they will have no money. If Amazon have no money, Amazon will run out of money and they will file for bankruptcy. And that's the end of the Amazon. And that's now apply that to the entire economy and you will start understanding how the economy generally works. So very strong spending in your country is the most important factor for growth of your economy. And that's why if you take a look at the Fed, the reason that the Fed's policies are so effective when it comes to the economy is because by lowering interest rates, Fed can strengthen the spending. By increasing interest rates, the Fed can weaken the spending. And that's how they can manipulate the market. So did China at this point particularly reach to the point where it has very strong local spending? Because if it doesn't, it will fall into something we call the middle income trap. The middle income trap is a problem that a lot of countries has fallen into. Now, some people will disagree with the point of middle income trap, but in order for you to have a very clear understanding of what it works, of how it works and why does it exist, think about that like that. You have an economy and the economy grows, and then suddenly it has grown to the point where you have no longer any competitive advantage except your cheap labor. But you no longer have cheap labor because when you were producing that at a super cheap price, it made sense. Now, because your economy has been growing, you started paying more to these people because the economy has been growing, and now you have to pay them so much salaries, so high income that you no longer can produce the exact same goods at a cheaper price. So your products in the market are no longer competitive, but you don't have any other advantage other than that. So what happens to your economy is that it starts stagnating. It doesn't fold, it doesn't collapses, but it doesn't grows. And what do you think happens when you don't grow? You are stagnating, and stagnating is not growth as well. So you never become a very high developed economy because you don't have any kind of competitive advantage over here. And that's why a lot of economies, when they actually reach to this position, when they realize that their only advantage that they have is the low wages, and because they haven't really developed such a high, complicated, advanced economy where they can actually just sell their products because they have high economy. I mean, think about that for a moment. The United States produces the iPhone, and across the globe, there is very high demand for the iPhone. Now, I don't really care what economy you are. I don't really care who you are. If you want an iPhone, you're going to get it from a US company like Apple. If you want some kind of high, very advanced banking, then you will get it from a company like JP Morgan or the Bank of America or not any other US bank, but if you just take a look at the top US banks. If you want any kind of high technology cost, such as Tesla, you will get it from a company like Tesla. Now, of course, there are competition in the world. Like that competition is coming up from China, and China has stepped up its game and it's developing electric cars, it's developing 5G technologies, and that's what gives you an advantage. Now, if you don't have those complicated technologies, you can't really produce them. Like China is suffering because it can't really produce such an advanced chips for its electronics like United States does, or the allies of the United States do at this point. And that's why if you don't have that competitive advantage, and if you take a look at China, of course, China has actually fixed that problem to a certain extent. But if you take a look at the history of China, suddenly you will realize that over the last 50 years, China has multiple times devalued its currency in order to stay competitive in the market. And what is devaluation of the currency? When exports of a country rise, when China starts exporting a lot of products, its economy starts growing, and the demand in China starts growing, the demand for yuan starts growing, and the Chinese yuan starts becoming stronger and stronger and stronger. And at some point, it can even outmatch the US dollar. But China does not want that, because a strong yuan means that the Chinese products are going to be more expensive in the market. Think about that for a moment. If let me give you a very simple example, and that will probably illustrate the entire point. If $1 equals to 10 Chinese yuan, and that product costs 10 Chinese yuan, then you will get it to the United States and it will be sold for $1. Now, this is a very simple example to illustrate the point. Now, what happens if the Chinese yuan now becomes stronger and now $1 is equal to 5 Chinese yuan? And now the same product that costs 10 yuans will be shipped to the United States and it will be sold to $2. Now, suddenly the price of that product from China has doubled in price simply because the Chinese yuan became stronger. What that tells you? That tells you that the Chinese products no longer price competitive across the globe, especially in the United States. And that will make the demand for Chinese products much lower. And that's why China, in order to avoid that problem, it has started doing currency manipulation. It means that it will purposefully devalue its currency in order to keep its products price competitive in the market. Of course, it has its downsides as well. That means that imports from other countries to China will be more expensive. That means that the average Chinese consumer is going to get poorer when the country is devaluing its currency. Another major problem that devaluing the currency actually brings to the table is the fact that it actually reduces the spending. Because if you want to grow out of the middle income trap, you need a very strong spending in your country, and that strong spending is going to drive the economy forward and get it out of the middle income trap. But when you're constantly devaluing your currency, what do you think is happening with the local spending? Of course, it goes down. Now, maybe if you are comparing it to the local products, yes, that is not really a huge difference. But because we are living in this globalized world, everything that is being produced even in China, their components come from the rest of the world. There is a very huge supply chain that brings all of those components to China. And that's why every time the country is devaluing its currency, it's driving the local spending down, and that's actually making it stuck in that middle income trap that will never get it out of that stage. Now, a lot of people at this point might tell me that, wait a second, look at the GDP of China. It has grown from a few $100 billion to $18 trillion. Does that mean that it's stuck in some kind of middle income trap? Doesn't that mean that the Chinese economy is simply growing too fast and all the arguments you're making are nonsense? Well, let's take a look at that for a second. This is the GDP of China since 1985, and this is the phase where it has been just opening up itself to the world. And when it built its basic infrastructure, suddenly growth has skyrocketed to around $18 trillion. I think we are at this stage of somewhere between around here, and this is like $18 trillion. And if you take a look at the estimates, then by 2029, it has to reach $25 trillion. Well, that's a lot. That's where the US economy is at this point. And I think by 2029, the US economy is going to surpass $30 trillion. It might probably be more than that. And I know that this graph seems very compelling. And when you look at it, you're like, wait a second. China is doing an amazing job. Why do we trash talk China? It's actually growing substantially. Well, I want to be kind of impressed by this number, but if you take a look at the GDP per capita, yes, it has been growing substantially as well. No questions here. But let's take a look at the GDP per capita. And suddenly you will realize if we actually take the numbers for 2024, I think this is going to be the point. Yeah, it is around probably $13,000 if I'm not mistaken. Yes. So $13,000. Now, if you compare that to the US, I think the US GDP per capita is like $77,000. Do you see the difference between these two? $77,000 and $13,000. So while the China's economy has grown substantially over the last 50 years, if you compare the average Chinese and you compare him to the average American, then he's not really that wealthy. Like the average Chinese is as wealthy as the average South African or the average Russian probably, or the average, I mean, it's significantly wealthier than a country like India, but it's pretty much where every other or most of Asian countries are. And if you kind of compare it to its neighbors such as Japan, I think the GDP per capita in Japan is something between like $60,000 or probably more than that. I don't really remember, but it actually tells you that China is still stuck in this middle income trap. I don't know where exactly it is going to get out, and will it actually get out? And it's not going to be easy. It's going to be very difficult. When China is going to surpass probably like $20,000 or $25,000, then we can say that China has successfully done that. Now, some people will point out and say, no, wait a second, the middle income trap is from something probably $10,000 to $15,000 per capita, right? Well, that might be true to a certain extent, but you also have to factor in inflation. When you factor in inflation over the last 5-10 years, you realize that $15,000 today is not as much as $15,000 10 years from now. When you factor in inflation, it is going to be something between $20,000 to $25,000. So what are the main problems that China is facing, and it's stopping it from actually breaking up this chain of middle income trap and getting to the position where it can actually call itself a high income economy or a developed economy. Now, from one side, you can already call China a very high advanced economy because it is producing some of the most sophisticated technologies in the world. It's leading the world in 5G, it's leading the world in electric cars, it's leading the world in solar energy, it's leading the world in wind energy, it is leading the world in a lot of other industries. But because of its large size and a population that is 5 times the population of the United States, it's very difficult to really have an idea. I think if you check China and you kind of take a look at the coastal cities, these are the cities that are extremely rich and wealthy. And then everything else in China is probably poor, that has a GDP per capita of less than $5,000. And these expensive cities have GDP per capita of something more than $60,000 and are closer to the United States in terms of the wealth of the average Chinese. The main problem that China is facing right now is that it's overproducing in order to stay competitive in the world. China is trying to overproduce, and the reason it's trying to overproduce is because if it stops producing, then demand for Chinese products are going to slow down, and that will slow down the economy. But that's not a solution. Yes, you're overproducing and you're literally filling the market with cheap products, and right now, China is already facing a problem that there isn't really enough demand for its products. And that's why it's kind of trying to explore Africa. It's trying to explore some of these underdeveloped countries. It's heavily investing in countries such as Pakistan, Nigeria, and other countries because it is trying to find markets for its products. But that's not a solution. The solution for China is to move and produce more high-tech technologies. Now, I'm not really that expert who should tell China what to do, and I think China will figure it out way better than I actually imagined for myself, and I will just discuss it here on the channel and try to figure out what exactly has happened over there. But nonetheless, that's a problem that China is facing because the growth for the last 50 years was because of producing. And now you're overproducing and you have to stop doing that and shift to something else. And if that ever stops and you won't find new markets for your products, then you're in trouble. Now, the next problem that China is facing is a real estate crisis. Now, this is probably the biggest crisis that China is facing. What we know from the 2008 financial crisis is that when you have a housing crisis, you have the biggest crisis you can possibly imagine. Because in 2008, we had too many houses, too little demand that led to the crash. Now, in China right now, you have 65 to 80 million empty houses. That's a lot of houses. And these houses are empty because there isn't enough demand for them. And the reason that China built so many extra houses is to drive growth. And why do you need that much growth? Is because if you stop building, it's the exact same problem that we just discussed, overproducing. Now, there isn't really much options to invest anywhere in China because the stock market is heavily manipulated by the government, and government has a lot of interference. So the only other option that you have when investing your extra money that you have is to buy another property. And that's why if you take a look at the numbers in China, you will realize that people buy second houses as much as they buy first houses. I think there are more third home buyers than first home buyers in China because everybody is just heavily investing in real estate. But you can keep building those real estate. But if nobody wants those houses, if there is not enough for those houses, what do you think is going to happen? I mean, it's a very basic economics. You have supply and you have demand. So when you have demand at 100, but then you have supply at 200, let's say supply was 100 and demand was 100. Suddenly supply is at 200 and demand is at 100. What do you think is going to happen at this point? Of course, house prices are going to fall. And that's exactly what is happening in China. House prices are going down in every single region. Not every single region. I think if you take a look at the wealthy provinces of China, things have stabilized to a certain extent. But overall, because you have this many empty houses, prices are going down substantially. And again, if China stops building more houses, and it already stopped building more houses because it doesn't want the situation to get significantly worse, the demand for these houses are going down, and because you're building less houses, growth is going down as well. Especially when you have a problem such as population decline. China has a very serious demographic problem. And what is a demographic problem? It basically means that population is going down and population is aging. Because of the one-child policy, there has been very little people coming out to China, because China does not have the kind of immigration like the United States has, where a lot of people from across the globe just come to the United States. Like, there are very, very few people who actually wants to go to China and live there, because it's a different country, it's a different culture, it has a very different language, and it's not English, and nobody speaks English over there. I mean, there are people who speak English, but overall, if you take China, English isn't really that popular. So when population is declining and population is aging, someone has to support this aging population. And who do you think is going to support that? That is the young population. But when you don't have enough young population and the aging population is rising, what do you think is going to happen to the pension system? This is the problem that every other developed economy has, but China has it on a completely different level. And when your aging population is growing and you have very few people actually coming in, what do you think is going to happen to spending? Spending is going to go down, and you are trying to save your economy by overproducing. What does that tell you? That tells you that the economy is in a real crisis. Now, I'm not saying that you cannot solve this crisis. Probably there are solutions, and maybe the CCP is actually working on some of these solutions. I can't really know for a fact. I'm just telling you what do we have on the table right now. Another major crisis that China is actually going through right now is the fact that it is facing some very serious geopolitical risks. When you turn on the news, you always hear about China taking over Taiwan, and then you have the US presidents and politicians claiming that they will defend Taiwan. Now, I'm not really an expert in geopolitics, and I can't really know what exactly is going to happen. Even if you're an expert in geopolitics, you can't really know for a fact what is going to happen. But what we know for a fact is that China is serious at trying to bring back Taiwan to the mainland. So that actually poses a lot of geopolitical risks, because when you have like a real war, a real conflict, then business people, companies are not willing to risk their investments, their factories. So what do you think they're trying at this point? Of course, they're looking at China. They're like, should we invest another $1 billion in China? Or maybe if there is going to be a crisis and we will be hit by US sanctions because we are operating in China and China is kind of trying to take over a US ally, and then we will be sanctions and we will lose our investments. Is that something an investor wants to do? So because of these geopolitical conflicts or problems that China has with the United States, it is driving out investments. It's driving out investments. And that leads us to the next biggest problem that we have, is that US companies that made China great in the first place are leaving China. They're leaving to other neighboring countries. Now, if you take a look at China's growth, it is spectacular. It has been growing from around $300 billion to $18 trillion. And part of the growth was that a lot of US companies shifted their manufacturing to China in order to take advantage out of the cheap labor that China had. And even when the economy started growing, all of those companies went back to China in order to take advantage out of Chinese consumer. So if you go to China, you have McDonald's, you have Starbucks, you have Tesla, China's market is one of the most important markets for a company like Apple, the most successful company in the world and the most successful American company. And now, what do you think is happening? Because of the risks that we have, all these companies are going to India, they are shifting their manufacturing to Vietnam, they are shifting their manufacturing to some other Asian countries, and a lot of these investments is going out of China. What do you think that means for a Chinese economy when all of this money, all of these investments are going out? Of course, Chinese economy is going to slow down because all those countries that used to produce everything in your country are now leaving your country. Of course, you have your competitive advantage. Of course, you have your own smartphones, you have your own electric cars. Nonetheless, you had the companies of the largest economy in the world. Of course, it will take some years or probably a decade or so for all of those companies to actually get out of China. And maybe they will not get out of China entirely in the next 5 to 10 years. Nonetheless, they will keep some of their manufacturing, some of their supply chains within China. We can't really say for a fact, but what we can say in conclusions is that China's economy is suffering. China's economy is in a transition phase, and how that transition phase is going to end, we can't really know for a fact, because it really depends on how China is going to manage this crisis and transition its economy from the middle income trap that it's right now to an economy that is going to be known as high developed economy. So what will happen to China's economy? It's very difficult to tell anything concrete at this time. Only time will tell us. We have to wait and see how the CCP is going to handle this crisis. Thanks for watching, and see you in the next one.